All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another Bitcoin video analysis. I am now simulcasting on TradingView and on YouTube. Okay, so let's get this thing started, shall we? If you're new to this stream, here's how it works. I spend basically the first 15 to 20 minutes talking about Bitcoin, right? Doing the price action analysis, looking at the levels and all that other stuff. And then after I complete my Bitcoin analysis, I then will spend the remainder of the time on your questions. Okay, so if you have a question about a stock or an altcoin, please share it in the channel now. Only one symbol per person, please, so I can try to get through as many symbols as possible. Also, let me know if it's an altcoin or not. Sometimes it's confusing. And as a fun fact, if you would like to share what country or what city you are from, that's always interesting to hear. Plus, if you are on TradingView and you don't see there's something wrong with the screen, simply refresh your browser and that usually solves the problem. Okay, so with that, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, first things first. Before I actually begin the analysis, we're going to go over the economic calendar. And hey, everyone, before I even go through the economic calendar, I just have to mention very quickly, I am sponsored by 8Cap Partners. They are a broker, a Forex and CFD broker that is located and regulated in Australia. And they offer numerous amount of instruments that you can trade through their platform, their MetaTrader 4, MetaTrader 5 platform. They are also a brokerage partner of TradingView. Okay, so which means you can actually open an account and trade your account through the TradingView order entry platform. Okay, so if you're interested in that, there's links in the signature portion of the video here or on the you know where to find it on the informational portion on the bottom of the video for YouTube. Okay, so anyway, if you have any questions about that, please let me know. All right, so next things next. Let's talk about the economic calendar. All right, now this week is a heavy week. Okay, earlier today I had not looked at the calendar, but after looking at it, so I'm going to just focus on the main things and explain to you why you need to know or be aware of these things. Number one, we have on Wednesday, all right, FOMC. So we have the interest rate decision here for the Federal Reserve and then their press conference. That information is out by 2:30. That's usually when their press conference begins, 2:30 Eastern time. Now, here's the thing. I mean, there's no way to know what they're going to say in advance. And the chart shows us one thing right now, and it can completely change if there are any surprises. Markets are random. Unless you know Chairman Powell personally, and he told you what he's going to say, you don't know. So don't go into it with any opinions. Now, I suspect, right, that they're going to stay hawkish, but they may change. They may say something that's not as hawkish as people expect. That can come out in the press conference. I'm not saying it will. I'm saying be prepared for a range expansion in case there are any surprises. This is very important. Like if you're in a Forex pair, if you're in a stock, it doesn't matter what you're in. If there are any surprises, anything that's very dovish or very hawkish, you will see an expansion one way or the other. It's binary, okay? So the best we can do here is mitigate our risk. I have a euro trade, a short that's on. I'm going to hold the euro through that event. So all I can do is hope that it comes out favorable, meaning dollar strong. That's all I can do. I mean, in the way things have been going, chances are, I think there's a better chance, especially if you look at that dollar chart, that it comes out dollar strong. But I could be wrong. Is that an opinion? I guess you could say it's sort of an opinion, but I'm betting on the side of the price structure. Okay, typically, a lot of times news and all that other stuff, a lot of times is in line with the bigger picture. But again, that's no excuse. Like, I don't know what's going to come out on that meeting. So again, I keep emphasizing that it's a heavy duty meeting. All right, so keep an eye on that. Now, and this is again why we use stops. On Thursday, there is the Bank of England. They're having their rate announcement. That's important if you're in a pound cross. Maybe that's why the pound has been so hesitant. I don't know, but that's what comes out on Thursday. On Friday, we have non-farm payrolls, okay, for the U.S., which again is another inflationary sensitive piece of information, and it can cause a binary movement one way or the other. There's no way to know. Don't think you know in advance. No one knows anything. So again, it's if I can get my euro trade through the FOMC, then I'm going to hold through NFP unless it reaches its price target before that. Okay, but that's the plan. All right, I have a stop in place, and all I can do is hope for the best and just see if the market plays out my way or not. I'm not in the Bitcoin short. Okay, I call the short. I don't short Bitcoin. People should know that. But that if there's a bearish move in the S&P as a result of these items coming out, you're going to see Bitcoin get hammered. It's in a location to get hammered. We're going to talk about that here in a moment. Okay, so again, this is not about profiting. This is about risk management. All right, now. So there's some other news items that are spread out in between that stuff. I just talked about the major ones. Make sure you check your economic calendar to be aware, especially like I said, if you're in like a Forex pair or something that's very dollar sensitive. All right, let's move on. Let's now get into Bitcoin. And let me see, I see some questions, or I see some activity here. Let me say hello to some people. So I see Steen. Steen was very clever. He asked a question very early, so it's the first one that I see. Hey, Bill, good to see you. All right. Sean, hey, good to see you. Cool, from Seattle. Sean's a longtime follower. Hey, Jeff, again. Man, Jeff, this is twice in one day you get to see me. Wow, don't you get tired? Kangsa, all right, good to see you. From Mallorca, a beautiful island in Spain, exotic, palm trees and stuff. I'd like to check that place out. Thanks for joining. Okay, hey, Shell, okay, cool. Han, hey, good to see you. All right, cool, no problem. Travel, good to see you. Travel is always happy when Bitcoin goes lower. Don't be happy, be objective. Anyway, and let's see what's going on here in TradingView. Anyone paying attention to me over there? Let's take a look real quick. All right, I see Joel. Good to see you, Joel. Steve. All right, my regulars. Hey, Nugget, how are you? Okay, Benil, good to see you from New Zealand. Okay, cool. Wow. What is it, like 5 a.m. over there in New Zealand? All right. So anyway, let's thanks for joining me. Anyway, let's get into Bitcoin here and let's talk about what's going on. Let's talk about the trade idea that I put out and the TradingView article that I wrote yesterday. Okay, so first things first, there was a trade that I put out like a week ago, whatever. Steen knows about it, and it was a short in this area here. Okay, for those of you that are not familiar with that, the short got stopped out here because that's where I put the stop. That was an aggressive trade, which I made very clear numerous times. Okay, now this location here on Bitcoin, that is the conservative or ideal place to be looking for the short. Why? It's a resistance. It's a resistance in a generally bearish structure. You say, what bearish structure? That's a range. Well, yes, that's a range, but what about that? That's a lower high relative to what? To this, okay? That's bearish. If I go to a weekly chart real quick, okay, this is not a bullish chart. Not right now. The short-term momentum is bearish. Yeah, you can argue that this is possibly a higher low relative to this low over here, but you cannot ignore this recent structure. It's bearish. Until that changes, I have to lean on the bearish side with my expectations and my outlook. It doesn't mean you avoid longs altogether. It just means you expect less, okay? So with that being said, I anticipate resistance levels to continue to stick. We are at a failed high resistance at that 20.5 to 21K area. All right. Now, not only was there a sell signal, what was that, Thursday to Friday at 20,250? That's the signal I put out. Okay. Then on Sunday, when I was writing my article, I saw this one. I said, oh, so we have basically a mini double top, or I like to call a compound sell signal. And now that new sell signal, this little bearish inside bar, that is active. Okay, see this bearish little inside bar I'm pointing to here? The low of that is 20,552. We are below 20,552 right now. That secondary sell signal is now active. So there are two sell signals in an area where selling activity has a higher probability of appearing. Is anyone long this by any chance, like as a swing trade? I'm just curious. Okay, and if you don't want to say, you don't have to answer that question, but I'm wondering, has anyone taken a long? Especially, my next follow-up question would be, have you taken a long based on the recommendation or suggestion of a fake guru because if you have succumbed to the herd mentality, because only, there's nothing bullish about buying into a resistance in a generally bearish market. On top of that, none of the fundamentals in terms of the bond market and all that other stuff that I look at, interest rates, there's nothing bullish, nothing. There's no potential for rallies to persist. Okay, we're just not there yet. At some point we'll get there, but we're not there. So as long as that's the case, I lean more on the bearish side. I anticipate resistances to hold, and I anticipate supports to break. If we get some bearish information or hawkish information from the Fed on Wednesday or something, and we see a dramatic reaction, this thing can test 18K very reasonably. It can break. If there are too many longs in this thing and they all have to get out at the same time, this thing can break that support, which can take this thing to 17K. I've been talking to about those 17K level the entire summer. The market just refuses to go there. I can't tell the market what to do. Okay, I respect the market, but that's still a reasonable possibility. I'm not sitting here coming up with nonsense opinions. These ideas are based on the price structure and the context of the general economic environment. I mean, that's where I get these ideas from. I could be wrong, and the market may change. Okay, and if the market changes, I adjust. But until I see evidence of that change, I have to go with the intent of the market. And that is what Bitcoin is showing right now, bearish. Okay, and that hasn't changed. I've been saying the same things for weeks and weeks and weeks and weeks and weeks. Okay, so anyway, let me see. Okay, I'm just looking at some of these comments. So you had a surprise stream, Matt. Well, actually, Matt, I'm actually on every day. I'm streaming every day. Okay, on YouTube. So anyway, I don't see Bitcoin fundamentally on the back of lower due to rise in. Okay, yeah, I don't know what that's about there, but all I know is, I don't care why the market moves the way it moves. I don't care why. Why means you're applying logic, okay? And markets are random, so there's no room for logic. We like to believe that logic has some sort of play because it gives us a feeling of control. We have no control. This is a game of chance, not a game of skill. So I don't apply logic like in that way. Okay, I'm basically looking at price structure and probabilities, things that you can't exactly see. And I'm always focused on here. Okay, I'm always focused there. What's back here is somewhat helpful, but it loses its value over time. I'm only interested in here. You have to stay ahead of the market, not look behind. And news and everything, the stuff people cling to, that stuff is completely useless. And if someone, here's the reason why, it doesn't matter. All that matters is resistance holds. If this thing sells off, it breaks supports. I mean, that's what I'm anticipating. That's what you have to keep in mind. Now, with something like this, again, you have to realize that you have to not react to what you see. You have to look at probabilities. All right, and probabilities are something you cannot see. So you have to sort of gauge, and that information can come from a chart. It's very select information that we can use from a chart. All right, notice I don't have my chart is not filled with garbage and oscillators and all kinds of lines. I mean, I have horizontal lines, but those are to note support and resistance levels. I'm looking at those levels in the context of the trend. I don't just look at a level in isolation. And you cannot look at a market in isolation. All right, Bitcoin does not trade in isolation. It depends on the bond market. Everything depends on the bond market. So since Bitcoin and all of its altcoins are highly speculative, we need speculative money to really get these things going and to keep them going. We need lower interest rates. Okay, is that logic? Well, yeah, I guess you can say that's logic, but that's like a physical relationship. That's an actual relationship. Rates go lower, more money comes around because money is cheaper to borrow. That's just a reality. That's just the way things work. Okay, that's economics. So that in that sense, that's important. Okay, that's why I pay attention to the bond market, not what people say about the bond market. I pay attention to the prices and the rates. Okay, so that's Bitcoin, and I'm basically, I'm still bearish on this thing generally, and we'll see how that plays out. Okay, things can change. Now, how am I doing with time? I got plenty of time here. All right, so any questions about Bitcoin or my Bitcoin analysis? Hey, G. Simone, good to see you. Malad from Upper West Side. Mike Bloomberg, his neighbor. Okay, okay, cool. All right, yeah. Bring Mike along too. Maybe he can have a drink with us. We could talk about New York City politics. All right, great, because things are great over there. All right, so let's see what we have here. Okay, cool. Thanks for stopping by. Any questions? Now, there's something I want to mention since while you guys are coming up with your questions, and then I want to answer your questions. I see a bunch of questions about symbols and stuff. I'm going to get into that in a moment. But I want to kind of give you some perspective here for a moment. And here, let me see if I can just change something here. With that change. Oh, that changes to that. Okay, hold on. I'm just fooling around here with the controls. Okay, so let me just go back to this. All right, so I want you to understand something about especially shorter time frame trades. In fact, before I mention it, let's go to Bitcoin here. Let's go back to that 5-minute chart. Those that were watching earlier know what I'm going to refer to here. Let's take a look at this 5-minute chart real quick. All right, and I just want to bring something up. So when we were watching this earlier, I was talking about a short over here in this area, right? Remember that short? And the short gave us a conflicting signal like right away. And that signal was over here, okay? Now, if you were able to get back into that, it was worth a little something, but then you got the bullish pin bar. Since then, I mean, this thing has been nothing but, I mean, look at this, trying to develop that lower high. I'm not going to get into all that detail right now, but here's what I want to mention. When it comes to smaller time frame trades, if you are new at this game, you automatically think that this is the way to go because there's a lot of action, there's a lot of excitement, and people seem to make all kinds of money. Okay, but first thing you have to realize is it's fake. Most of it is fake. Most people that are on YouTube and all that, they don't make any money. There's many ways to fake that you make money. Many ways that seem very legitimate. I mean, I was fooled by a couple of things until I found out how they were faking it. Okay, anyway, and I've been in this game a long time. So first, keep that in mind. Okay. Second, when it comes to these smaller time frames, what you can't see here in this area, let me draw a little rectangle there. What you cannot see here is what you're up against. Okay, so let me give you a quick analogy. When you, and I'm going to use, I usually use the NFL for this analogy, but we have non-US people here, so I'm going to use professional soccer, okay, or football as they call it in these other countries, professional soccer. So if you're a kid, like a 10-year-old kid, and you just learned how to play soccer, okay, it's and someone says to you, hey, you know the rules of the game now and all this other stuff. So if I'm going to teach you a special thing, I'm going to teach you the special strategy, and you, 10-year-old kid, will, once you learn my strategy, you will be able to play in the World Cup next week. Okay, now a 10-year-old kid can't play in the World Cup game. Why not? Why? He knows the rules. He knows how to kick the ball. He knows the techniques. Why can't he play in the World Cup game? Because he's competing against men who are faster and stronger and have a lot of experience. How would that 10-year-old kid, compete when he's competing with that? Okay, of course that's laughable and that's obvious. No 10-year-old kid is going to play in the World Cup game, just like no Pee Wee League football player is going to play in the NFL because it's just not practical, right? Of course, that's easy to see. But then why do you think you can trade on this time frame when it's the same thing? You are that Pee Wee League player and you're like, oh yeah, I know how to place stop orders. I know how to press the buy button. I can read a chart, but you don't know what you're up against, okay? You're up against the smartest people in the world working for market-making firms that have the greatest resources in the world, the greatest talent in the world, the greatest political connections in the world. You cannot compete, okay? So you need to understand that. Anyone that thinks that you're just going to walk in and, in a couple of months, I'll have this and I'll be making money. You will not be making money, not consistently. You will make money randomly, but anyone can make money randomly. You can flip a coin and you can make money randomly, okay? But to achieve this dream of consistency that all these people proliferate all over the place, don't be fooled by it. That's what I'm trying to tell you. Do yourself an experiment. Go to Google, right? And type in how to trade Bitcoin or how to trade Forex or something like that, okay? and just notice the nonsense that comes up. Every item that comes up in that search implies a skill. Like, oh, yeah, Forex traders make money after they learn a few things and blah, blah, blah. And Forex traders can make a lot of money and blah, blah, blah. Right. And they always put like they can make money and blah, blah, blah. No. Okay. You have it's all baked in. So we automatically come into this game assuming, oh, there is a way to make money at this. No. Okay. There's a tiny chance. So in order to improve your chances, I mean, is it impossible? No, it's not impossible. Okay, but it is not easy. All right, is it impossible to get into the NFL? It's not impossible. We see people get into the NFL all the time, but how many people get rejected? How many people fail? You don't see that part. Okay, this is a very hard game. So in order to excel at it, the first thing you have to do is become aware of your role and how you fit into this game. Because if you embrace that, you will have a better idea, a better perspective on how to interpret all the information that is thrown at you. Even when you open up one of these platforms like Binance or one of these other platforms and just look at the order entry, the way it's all set up, it's unbelievable that they get away with that, okay? But you know what? They do it to stimulate you. The news items that you read, it's all there to stimulate you to do something, okay? To take action, to sell, to buy, to do something, to pay a fee, because the industry makes money on fees, not on your trade performance. Okay, so I know it's a long rant. I just had to mention that, all right? Because again, it's important to really embrace that and understand your role. As a retail trader, we are sheep, and our role is to be fleeced. Please embrace that, internalize that, because that means all the information that's given to you, everything. Oh, the oscillator. Oh, this news. Oh, I'm going to get a robot for $30 a month, and it's going to trade this and it's going to make money for me. It's all fake. Okay, it's all set up for you to pay fees. There's no making money that way. All right. Anyway, let's move on. Let me start now answering your questions because, man, I'm just going overboard with that rant. All right, so Steen asks first here. You once told that the euro stocks go higher because of weakness in the euro. Is this always the case? Maybe not always, but here's the example I bring you. And let's go back. I don't know if I can pull this up here. But if you look at the Turkish lira, okay, and you compare the Turkish stock market, let me see if I could find that here. Turkish stocks, can I see the Turkish stock market here? I don't see it. I don't see it right off the bat. Let me see here. I want to show an example because here's the thing. Here, well, here's against the lira, right? So look at the Turkish. This is the Turkish lira. The dollar against the Turkish lira. Okay. So this is the dollar, which means the Turkish lira is really low relative to the dollar because the dollar is just look at this. All right. So when you see something like that, and the Turkish lira is basically just completely devalued here. Well, the stocks were going higher. Why? Because it requires more lira to buy the stock. So the stock price goes higher. Same with the US dollar. When we see the dollar go lower, okay, stocks rise and everything rises because it requires more dollars to buy that same piece of gold or to buy that barrel of oil, right? When the dollar rises, then what? It requires less dollars to buy that barrel of oil or to buy that piece of gold. So the price goes lower, right? So I bring up the Turkish lira because the stocks were rising. You can see that, you may see that same effect in the euro. If this is inflation on the euro, if this is inflationary, and usually a currency value that's going lower, it's usually a sign of inflation, right? There's too many euros floating around. Then that is likely to push the prices of European assets higher because it requires more euros. Now, it's not a one-to-one relationship. Keep that in mind, okay? But that's the general effect. That's the economic effect that I would believe, okay? Again, markets are not always rational. They're not rational at all. So just keep that in mind. It's not just, the market's not going to react this way just because it should. Markets are irrational. we're in a generally bearish situation and we see these pop-ups in the stock market, they're completely irrational and they're just reactions by, there's some news comes out or some kind of surprise and people generally react. That's what you're looking at there. All right, so I hope that answers your question, Steen. All right, let me move along here. Okay, so let me see what else we got. Listening for, okay, got that. Okay, cool. So I'm just jumping to the first question. So we had a support, okay, Han, very well with Doji, got out at 140, okay, and got in at 012. Made a bearish pin bar today inside. How to see this? Okay, Doji coin. Well, all right, so first things first. Let's go to Doji. I'm probably not even pronouncing that right, but you guys know what I'm talking about. Ooh, look at that. So interesting. Let's take a look at the weekly chart. Yeah, so look, this is a meme coin, okay, first of all. So for whatever reason, they got this thing going, is whatever reason. It doesn't matter why. These are driven by complete hype and complete nonsense. It's the herd mentality. It doesn't mean you can't trade that, but just understand what's behind it. There's nothing behind it besides nonsense. So you have to, this is pure herd mentality, and you have to be looking to capitalize on that. If you made some money on that, great. Now, as far as you said, bearish pin bar today. All right, so let's take a look at this on the bigger picture first and look at the levels. So notice it hesitated, okay? That pin bar area situation is an old support, which is now acting as a new resistance. First, so that level or that type of behavior could have been anticipated, first of all, okay, based on that. Second, let's take a look at the smaller time frame now. I mean, that's quite a move there. So I wonder what the nonsense is. Here's the thing. So you have this bearish pin bar here. You have an inside bar, bearish pin bar. I see what you're talking about. And that's happening at a previous resistance. So here's the thing. Right now, at this moment, this structure is still bullish because why? There's a higher low right there. And there's actually a buy signal in effect, while Bitcoin is showing us the opposite. So clearly, it's an outlier. It's doing its own thing for now. How long will that continue for? No way to know. It can turn at any moment. Once that herd mentality runs out, once the party's over, you'll see this thing back here. So you're basically playing a very, a very risky game. Understand that. It doesn't mean you can't play it, but understand. So there's a buy signal in play from 1186. Okay, that's where the signal's in play from. This thing is at 1261 right now. So can it continue and take out these highs? If it can, then perhaps you have a higher high coming. But how far can it go? Who knows? Again, you have all resistance in this area here, so you're going to be competing with that. If you go long on something like that, looking for the breakout, you have to babysit this thing, because if it gives you another failed high in this area, another pin bar, that would be basically a failed high or double top variation, extremely bearish. Okay, you don't want to be buying, you don't want to be the one long at the top of that. Okay, so a lot of people, they're going to make the mistake, they're going to, oh, Dogecoin is going to go to here because Elon Musk is going to buy it, and whatever nonsense they come up with, and they're going to think that this thing is going to double and triple. So all the retail morons are the sheep. They're all going to buy, here, thinking it's safe, it looks good, blah blah blah. That's the most vulnerable area. And the riskiest area to buy. If you were going to be long this thing, you should have been accumulating during this consolidation, right? Especially if you're in some kind of chat room and they've been telling you, we've been tracking this and blah 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 blah, right? That's the low risk area relative to this where we are now. Of course, after the fact, we can say that. Before the fact, we were like, oh, that looks like garbage, right? Because it was garbage, especially sort of behaving similar to Bitcoin in this situation, right? But it's a meme coin. So these erratic movements are possible. Don't get lured in by this, and don't think that you got like the next Bitcoin here. Please just understand that. Look for those warning signs if you go long. If you go long and this thing takes out this low at 1133 or whatever, right? And then you have the support break, then most likely this is going to consolidate like many other coins and then go nowhere. And those are all the people that get stuck in this thing. So that would be my perspective on that. If you go long and this thing gives you a problem, don't get stuck. Respect your stops, especially on something like that, okay? Understand what's driving it. Okay, cool. Thanks for asking about that. Certainly, it's an interesting move. And I believe that when we get back into the more speculative environment, we're going to see more moves like this, because that's what people do. They get these herd mentalities together and they start proliferating this news, and you get these outliers. But the idea is you need to get into this before that move, okay, not after it. So and then you want to sell into this move if you're long from good prices, like the insiders. All right. Anyway, let's move along. So thank you for asking about Dogecoin, because I don't watch that one very carefully. Okay, Kim Maker, let's take a look. How's that one been doing? Someone had asked about that a couple of weeks ago, and I was tracking it for a little while. Okay, so see this situation here. I mean, this is what I'd be anticipating from something like Dogecoin, because you get the same idea. All right, you had all this hype and nonsense, and everyone excited, and this is going to be the next Bitcoin. It finds a double top in an area where a double top is likely to develop, and now it just gives it back, right? And now you have all these people that are stuck up here who all thought this was safe and this was the way to go, and they believe their fake guru. Now let's talk about where this thing currently is now. Now hold on a second. Is someone spamming me? Would love your thoughts on Plug. Okay. All right. So usually people don't put charts in the stream. So if I see a chart, the first thing I think is spam. If it's not spam, okay, cool. So if it is spam, don't spam me. So here's the thing. Maker, all right? It's pulled back to a support area. That part is true. The general structure is bearish recently, right? The recent structure, and it's trying to find buying activity there. It's trying. It's not doing a very good job, though. I mean, look at this. It's hesitating. If it breaks this support, then it's likely to start pushing to the next support, which is here. Okay? So you have to keep an eye out for that. Watch these resistance levels. If price cannot take out those resistance levels, both of them, then this thing is suspect of possibly breaking. The other thing you need to watch when you see things like that, because I can understand why this would be on your radar. It makes sense. But go to the weekly chart and look at this relative to weekly levels. There's nothing impressive here at all. That's just nothing but a lower high. There's a weekly bearish pin bar that's in play. So this thing, in theory, is more likely to test that low, the lowest low there, which is what, 708, like that 700 area. So that is where your expectations should be. That should be like the root of your expectations, right? You start from there and start with this time frame, because you have not taken out any weekly resistance levels, right? So you get these short-term like squeezes, kind of like what we saw with Bitcoin, kind of like what you see in Dogecoin, and you get these temporary moves, and then everyone wants to buy into the follow-up of that. But this temporary move was nothing more than the noise, right? When you look at it in terms of the weekly chart. So just something to keep in mind. Now, it doesn't mean that this thing's going to just completely fail, but if it can't break these resistance levels, then, and if you're in it, you should probably mitigate your risk, tighten your stop, do something, okay? There's no reason to step in front of this thing right now. Perhaps wait for a break of these highs, basically 930, that 930 area, if you want to try to give that a swing trade, for a swing trade long, all right? But just keep in mind, it can easily fail anywhere inside of here. Keep that in mind. So knowing that, you should have an idea of where you should be anticipating your profit target. All right, that's MKR. Thank you for asking. Hey, Alex, good to see you again. Can you look at oil? Sure. Short-term bullish momentum seems okay. Let's take a look, and then I'm going to jump over to TradingView here. So let's take a look. Hold on. Oil, USD, WTI. All right. All right. So oil, first of all, understand oil is a function of the dollar, right? Strong dollar, oil is going to be under pressure. Now, oil has its own forces, right? Oil is driven by a lot of things. It has geopolitical stuff, all that. But there is a resistance level right there on oil. So we shouldn't be very surprised to see this type of move, okay? It's a lower high, and especially in light of the dollar, which found support in an area where support was clearly anticipated. I went over that a few days in a row, right? So if anything, we should have known not to be shorting the dollar or taking something that would benefit from a short dollar at those levels. Anyway, so right now, I mean, this is a short in oil. That's a sell signal. It's a lower high. Resistance levels are generally respected. Let's take a quick look at the weekly, right? And the weekly, sure, we can argue going back that oil is generally bullish, yes, okay, but that could be, a fact that can be relative to so many factors. Don't get caught up with opinions. This structure here is a bearish structure. It's bearish momentum, and you have a lower high that's basically developing here. The lower low at this point is likely to be tested. That's around $80. So I would be anticipating, a test of $80 before anything else if this structure stays intact. Now, if we have some kind of dovish news out this week and blah, 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 thanks to the FOMC, and we get a bullish pin bar like right away, and next thing you know, you see oil back up here, well, then it's changing, okay? You have to recognize the change. Hold on a second. This thing is giving me a hard time. You have to recognize the change if it works its way, up into that area, okay? Keep that in mind. All right, let's move along. How am I doing with time? Okay, not too bad. All right, so yeah, hold on. Look, you guys that share charts, right? If you're a premium member and you're sharing a chart, I suspect that's spam, okay? Because if you're a premium member, you probably have something in your signature and blah, blah, blah that people click on. So don't be putting charts in my thing if you're like a premium member and stuff like that, because that looks very spammy, all right? I'll take a look at plug, but again, just keep that in mind. Let's move along here. So oil, that was what? How does your day look like? How do you schedule? That's an interesting question, Kai. Well, first of all, no one's ever asked me that question. I don't trade the open, as you know, because I'm streaming at the open. I don't trade the open. And the reason why I don't trade the open is because there's a lot of news that comes out, and I focus mostly on S&Ps, okay, on an intraday basis. And the open is just a mess because sometimes it looks like one way and then some news comes out and it completely throws you off. So what I like to do is I like to look at the afternoon around this time. And because the market, a lot of the levels are established, the trend is typically established, and I'm just looking for follow through. So that's pretty much as far as trades go. The afternoon is really, my trade time. And I don't trade every day because there are some days I'll look at it and it looks like just complete garbage, or it just doesn't look good, and I don't trade. Right? You don't have to trade every day. That's an important thing. I need to see certain things in place for me to continue. All right. Otherwise, it's not worth it. It's just not worth wasting the time getting caught in something that just, you're going to lose money on anyway. All right. So that's pretty much how it works. Otherwise, I'm either streaming, I'm either looking for swing trades or something to put in the channel, or I'm doing other work because that's all I do is work and, getting my other stuff together. So that goes on all day. All right. Not just market hours. So thanks for asking. All right. Hey, SD Trader, good to see you. All right, Levent, hey, how are you? Okay, no problem. From Turkey. All right, see, he was talking about the Turkish lira. All right, let me jump over to TradingView here. I've been ignoring you people. I'm sorry. Let's take a look here. What's going on? I see all these questions. I have to go back. All right, can you look at TIP ETF, gold miners? Okay, so I'm going to look at TIP ETF. All right, sorry, I'm just getting to that. So let's take a look. TIP, I'm not going to do the gold because only one per person. So TIP, that's the bond market. TIPS, you talking about TIPS? You must be talking about this, bond ETF. So this is just a reflection of the bond market, all right? And it looks very similar. I mean, I watched the 10-year note futures. I mean, it looks very similar. You have generally a bearish bond market, all right? Bearish ETF, no surprise there. You have a lower high, all right, resistance. This is a range. You have a lower high consolidation, right? The top part of that range has stuck, right? It was respected. There's a doji, sort of a bearish pin bar, like a doji right at that resistance. And as you can see, there's a sell signal. Not surprising, right? So don't look, when you look at a chart like this, don't use this chart. This chart is very sporadic and it's not a very good point of reference. Use the 10-year note futures because it's a nice, clean and clear chart. I mean, it's going to be basically the same chart, basically, okay? This chart is much clearer and much easier to understand. Okay, and that's clearly a lower high, and it looks like it's going for the lower low. So if that's the case, that TIPS ETF is not going to go higher if this thing is pushing the lows. So use this as your gauge. Okay. Anyway, thank you for asking. And if this thing is going lower, that means rates are rising, which means anything that trades against the dollar is going to have a hard time, like gold. All right. So Benil, all right. Monthly close on the dollar looks like a minor pause in its run up. All right. Monthly close on the dollar. All right. Look, so I don't usually look at the monthly, but you want to look at it. Here's the thing. I look at the daily and the weekly. This is bullish. Okay. Nothing has changed here. This is completely bullish. Let's take a look at the weekly, right? I mean, look at this. That's pretty bullish on the weekly. And we just had these little minor pullbacks. No support levels are being compromised. Now, you want to look at the monthly? All right. So let's take a look at monthly. 1M. Okay. So, yeah. All right. Pause. Okay. Pause on the monthly. But this is meaningless. In fact, this is an inside bar. And this is going to close October. It's going to close like that. This is an inside bar. This is a trend continuation pattern to go long. If the high of this is taken out, okay, the high of this is taken out, which is 113.94, this thing is likely to go higher, not lower. So again, all these people trying to be bearish on the dollar, you need to break support levels to be bearish. We have not broken one. All we do is we break like a minor, like this little minor thing, and then it finds support at a major area where it should find support. And now it's working its way, like it's sitting right at the midpoint of the range. So nothing bearish about that at all. I'd be still looking for longs, and I'm short the euro. So anyway, thanks for mentioning. Okay, BTC doesn't, okay, we heard that before. Thank you for mentioning that. Okay, Malad, got you. All right, Nugget, you say it depends on the bond market, but don't look at the movement in tip, which takes into account inflation expectations. If nominal rates don't move as fast as inflation expectations, that is bullish for risk assets. Don't get all caught up in those complicated opinions. You got to keep it simple, okay? Just look at the 10-year note. Look at the futures, right? It's a nice clean-cut chart. If that goes lower, it doesn't matter. I don't care about the extra little thing with the real interest rates, whatever. The market looks ahead. Okay, not what's going on now. The market looks ahead. So that's just something to keep in mind. You can't go by what's going on now. What is going on now is old. So the market prices in the future, perception of the future. All right. So as that perception is shaped and changes, we see charts develop and change. All right. Don't get caught up with all that nonsense. I think Bitcoin to 19,100 and do a run. Okay, you're thinking absolutes. Not a good idea. Don't think in absolutes. Hello from Croatia. Okay, cool. Good to see you. Okay, any ideas on gold and oil? All right, so I went over oil. Let's take a look at gold, XAU. XAU. Let me get this thing going here. This thing won't give me, can I get that? XAU, USD. All right, so, well, again, we saw the dollar, right? We saw oil. Now, here's the thing. Gold is bearish. There was never any reason to buy gold. There were some potential aggressive swing trade longs, which I've mentioned. I never actually called any trades on this, but I said there were some possibilities off that double bottom, but you cannot have an opinion. If dollar rallies and dollar makes higher high, this is likely to make lower low, okay? You have a lower high right here at a resistance level where a lower high is likely to develop. There's no reason to be buying gold. All right, especially on the short term, absolutely no reason. Now, gold is typically not a short-term instrument. If you're going to play with gold, you're looking at the CFD. If you're looking for swing trades, there's nothing to do here right now. You missed the short, and now it's going back into support. So while the lower low is very likely, shorting this thing now, you're taking a lot of risk, because if there's anything dovish that comes out over the next few days, this thing is going to spike right back the other way. Okay, it's not worth the risk. But if you're thinking long-term with gold, which is typically the case, right? Take a look at the stocks, Newmont Mining, right? See, the stocks don't get hammered as badly as gold, not on a one-to-one basis. So you accumulate shares, small shares. You buy a couple here, a couple there, while gold continues to push lows, right? This thing is likely to test lows and break lower as gold does a similar thing. So you can get these shares cheap over time. When we get back into an inflationary environment, and you say, but we are in inflationary. No, we are in an inflationary environment, but we have a Federal Reserve that is on top of it. And we have a Federal Reserve that is doing everything they can to control that inflation, right? So we need the Federal Reserve to get off of that. When they get off of that and they let inflation run rampant again, then you will see all that spectacular stuff in gold. But right now, no way. Okay, don't fight the dollar. It's very simple. Don't fight the dollar. All right, so that's gold. I hope that helps. But so if you're thinking long term, small bites, small bites. We need to be in a shrinking rate environment, not a rising rate. We need rates to be going lower. That invites new inflation of the future. All the inflation that we have right now is like it's priced in. And now the market is seeing, the future. And in the future, with the Fed as hawkish as it is, the future means lower inflation, right? Because they're on top of it. That's the way you have to look at it. Everyone looks at right now. You have to look ahead. That's what the market does. It looks ahead. That's where the perception comes from. Okay. Do you give broken resistance lines any meaning? Bitcoin broke resistance. Okay. A little over 2 months, beginning August. Bullish signal? No. Let's go back to Bitcoin. So again, you have to be careful with that kind of stuff, right? People talk about, oh, look, trend line, right? And they draw a trend line, they connect these highs, and it broke over here. That's not very meaningful, because the trend line, you have to understand something about those type of trend lines. You're connecting some structures that can be helpful for smaller time frame kind of stuff, but not the bigger picture. And the reason for that is on the bigger picture, you have greater context in play. The market does not see that trend line, okay? That's just something retail traders react to. The market doesn't see it, and the market doesn't really care about it. So I would not take that as a bullish signal. Now, it's possible when you have a trend line drawn like that and it breaks, right, and it breaks out, then the retest of the trend line, which would probably be like something like over here, can be a potential support area, but that's it, okay? As far as, whoa, Bitcoin is giving us a buy signal, it's just completely random, all right? And the probability of that following through, again, you're going against interest rates, you're going against a strong dollar, and this thing has not taken out any significant resistance levels. A trend line is not a significant resistance level. It's just a line based on some other geometry. That's really all it is, right? And we're expecting things to continue. You have to look at levels that actual action took place, okay? Look, people sold Bitcoin over here for whatever reason. That's a fact. We can see it on the chart. People sold Bitcoin up in this area, okay? It's a fact. We can see it on the chart. I mean, look, lots of selling took place there. So those levels matter more than a trend line. Does that make sense? All right, so I hope that answers the question. That's a good question. This looks like a midterm makeup bear rally. Wouldn't be surprised to witness S&P. Okay, well, again, yeah, I don't have opinions, but I lean bearish because rising rates are bad for everything. Okay, that's the way I see it. Until that game changes, it just, it makes sense to expect more from selling activity and less from buying activity. Things can change, and I always have an open mind, and I'm always prepared for the market doing something irrational and something that does not make sense, because markets are irrational, right? So I accept it. I don't question it. But anyway, okay. Milad, do you short the S&P if it rallies and gets rejected and breaks support? Looks like a real nice short setup. Well, yeah, I do short the S&P. But on the bigger picture, what I do is to short the S&P. I don't, because I play this with I don't play this with like regular shares. And to play a game like this on the bigger picture, I prefer options. Okay. Now, right now, we could say, yeah, S&P looks like a short, possibly. Short. You're at a resistance level. It's trying to give us a setup right now. But to go that far out, you're talking like December or whatever, it's too early, right, to make those choices. Plus, that's one thing, you're becoming opinionated. There's no signal right now. We are at a resistance, but there are other resistance levels, right? This is a notable resistance on the S&P, but we have another one over here. So it's possible, if the market really wants to get stupid, it's possible that the market can rally to there first. Right? Again, markets are irrational. They're driven by fear, they're driven by greed, and they're driven by perception, right? So if whatever reason, if the S&P wants to continue this little rally that it's got going on here, it can get there, but that's not exactly a bullish market. That's just continuation of short squeeze, right? Unless we see some changes with the Fed, we see some changes with the bond market, then maybe this thing will start to change its tune. But this is way too early to tell. So I can't have any opinions as far as long or short, like in that context. But if I was going to short the S&P at a resistance like it is now, I would use options. Okay, you can use bear call spreads, bull put spreads. I'm sorry, I got that reversed. Bear put spreads, okay, or you can use like a short call spread, which is actually a little riskier if you're shorting. It's like they're vertical spreads. You short the bottom call, you buy the top call for protection, okay, or a little more sensible, you buy the lower put, okay, and then you short one lower than that, or whatever. I think I got that reversed too. I get confused when I'm trying to stream and talk about options. But there's something called, there's something called vertical spreads, okay? So you would actually, you buy one and you short one. The short one basically reduces the cost of the spread, right? But there's two types of spreads. There's ones where it costs you money, and there's ones where you take in money, okay? So like, for example, up in here, you can sell a call against this. But do you want to sell the call naked? Probably not. It's a very risky thing to do. So you can buy a call on top of it. And the difference between that short call and that long call is your risk, okay? And it's fixed. So anyway, that's how I would play a game like this. You can either do the thing with the short call, or if you're going to go with the long put, puts are looking to take advantage of a market that's going lower, then you have to lower the cost of that long put, right? So if you buy a put and you want price to go lower, then you're going to have to sell a put, to reduce the cost of it, and that really reduces the risk. And if you're wrong, your cost is much lower. That's the whole idea. Anyway, all right, I'm not going to spend a whole time on options here, but that's the way I would play the S&P on that time frame. All right, I've played the S&P and the Nasdaq, without options, and it's just too risky. Things change so fast, and you get hammered. So I like options for that because you can control the risk so well, and you can basically, because you can do it like that, you can be very aggressive and step in front of these things at times when typically you shouldn't. And if you're right, it works out really well. If you're not right, you don't lose as much money as you normally would if you were outright short. Does that make sense? I don't want to confuse people about options, but anyway, that's what I would do with something like that. So good question. Will Dogecoin go up more? I have no idea. All right, it's poised to go higher, but it can easily fail, like I explained. So I'm not going to explain all that again. Okay, plug. All right, so here's my spammer over here. I suspect this is a spammer, but let's take a look. Plug. I mean, I could be wrong. Sometimes I accuse people of spamming, and they're not spamming. But so Plug Power. Well, first of all, this is that whole energy sector thing, right? I mean, look at the recent price action, lower high, lower high, lower high. It's trying to find buying. You have a bullish pin bar at this low over here. See that? But the thing is, again, people get all wrapped up and they say, well, there's a support there. There's a pin bar there. I want to go long, right? Okay, but you people right away, they ignore all this. You can't ignore that. So you have a resistance right here. And you also have, keep in mind, these things do not trade in isolation. You have to look at the stock market, okay? You have to consider interest rates. So if rates are going to continue to rise, this thing is not likely, since it's a highly speculative stock, it's more of a speculative stock, it's not likely to do anything spectacular anytime soon. So if you're going to take the long, you have to keep that in mind. Otherwise, you stay away. Like, why short into a support? Okay, it may not go very far. I don't know. I don't like it either way. Let this thing prove itself. Let this thing change, and also let the market change. So this thing needs to start taking out resistances. The conservative thing to do here is let the resistance break first, and then look for a higher low. Okay, that's something like that. Again, if you're investing in this thing, okay, look, you're certainly not buying at highs, that's for sure. But this thing can go lower if we don't have a friendly environment, and especially these, okay, which are highly speculative. Okay, so I hope that answers your question. Let me jump over to the other chat here. How am I doing with time? Let's see. All right, I got still a little more time, a little more time. Do I have people watching me? Let me just see. Let's see who's watching me over here. Otherwise, sometimes if I see no one watching, I'll cut out early. No, I see people. Okay, cool. There's people here. All right, so let me just jump over to this other chat. Let me see what I got. By the way, if I miss your question, I apologize. Sometimes I just skip over stuff and I just don't see your question, even though it's here. So if I miss it, I apologize. Please come again and ask me again. All right. Okay. All right. Let's see here. Let me just go back. All right. Great work. Okay. No problem. Okay. Doji pumped because of Elon took over Twitter. So, all right. I'm not surprised. All right. People speculating that, Elon Musk is going to accept Dogecoin, whatever, blah, 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 Twitter. Do you consult yield curves? Do those provide? Well, okay, good question, Toby, about yield curves. So I don't specifically look up the yield curves, but I do believe that the yield curve, because everyone views the 10-year and 2-year when they invert, right? That signals recession. That's a perception. So I do keep that in mind. If the yield curves are inverted and we have that perception, then that's a bearish thing, right? And there's a fundamental reason why they invert like that. So I do keep that in mind, right? But I don't sit there and go actively look for it. If I happen to read something, their yield curve is inverted. Okay, well, I know that basically all the other information that I'm looking at, like the rising rates, is still in effect. Okay, but that's as far as I go. I don't overthink it. But there is something called the Pring-Turner economic cycle, which is again sort of a reflection of the yield curves, and that is like basically the seasonality of money, and that's where I just focus on the bond market. Okay, you can Google that. All right. Okay. Han, accumulated at 06. Okay. David, can you give some insight on how the positive employment rate in current growing economy, all right, so it can affect next rate hike? Okay, David, so here's the thing. When it comes to that kind of stuff, right, how to interpret that economic information, it's a function of market sentiment, and you have to let the market do that job. Okay, so right now, I believe the perception is this: better job market, or more employment, is actually a bad thing, because the Federal Reserve says, well, if we have more employment, that means we're going to have inflation, which means we have to keep rates, we have to keep pushing our rates higher, right? That's how they view it. So if that's how it's viewed, then good employment logic, well, more jobs, that's good for the economy. But the Fed does not want to see a hot economy right now, because they're seeing that as, oh, that's inflation, that's inflationary. So our rates aren't high enough. We need to cool this thing off. That's how that's the perception. Okay. So, but I don't sit there and read all this stuff and try to figure that. Don't bother. Let the market do the work. Okay. So if the market wants to sell off on a good employment report, that's most likely the case. It may initially rally and then sell off, because rising rates are bad, right? And if rising rates are going to continue because we have a resilient economy, it doesn't make sense. But you have to look at it from the eyes of the Federal Reserve. They control the interest rates. They control the money supply. Okay, so you have to look at it that way. Whatever you do, don't become opinionated by it. Just let the market figure it out. All right, and if you're wrong, perhaps maybe you take a trade and you're wrong. You mitigate your risk, right? You take your loss and you then reevaluate. Let the market do the work. That's why I tell people, I don't think, the market thinks. Okay, and then the market tells me how I should adjust. I listen. I don't assert myself. Okay. There's a lot of meme coins that go off, okay, where you can put some money in play. Okay. All right, well, it's possible, right? You have those outliers, Han, definitely. There's those, and I would like to actually get more on top of those, and find some potential outliers that I can share with people that have that potential. There's nothing wrong with playing that game as long as you understand the game you're playing, okay? Because what people do is they stay in it thinking, this thing's going to go to 50K like Bitcoin, right? They get these ridiculous ideas, and then they just get caught in the thing, and then they just lose all their money, right? That's what we don't want. So I am interested in those outlier altcoins that play that game, and I believe that they will especially get interesting when we do have a more supportive environment, because right now the environment just does not support these things at all. Okay. All right, how can I ask a question? Well, you just figured it out. You're asking a question. Just type it in. How about KNC? Okay, KNC. Let's take a look. And I'm going to wrap this up here momentarily. KNC. What is that? Is that a gold company? Is this right? K9? I don't. Tell me. I don't know if I have the right symbol. That doesn't look right. Maybe it is. I don't know. Please correct me on that. All right. Let me just move along. Let me see what else I can answer. I'll place a stop loss. Okay. There's a lot of meme. Okay, good. That from Toronto. Hey Ben, how are you? What do you think of BBBY? Ooh. All right. Well, I know they've had some problems. Let's take a look. This is one of those short squeeze, low float plays, right? So again, this is like a meme coin. It's the same idea. You're certainly at a support level. Okay. I mean, that is clear on the chart. You have a support level. So if you're going to play this game here, I mean, what you're waiting for is for the hype to come back into this thing, and you're probably going to need a stronger market. Although these things tend to do their own thing at times. I mean, look, you have this initial push recently, and it's just trying to find some support inside of that range. But there's not much you can really do with this technically. It's like basically if a buy signal goes off, you have to buy it, right? If you want to, and just hope for the best. That's all you can do, right? This is one of those low float, like all the day traders pile into it when the crowd starts piling in, right? And you're hoping for a spike, and that's it, right? Technically, all we can say here is you're at a support. It's trying to develop a higher low, but it's in a market that's not supportive. Okay, the company is not a good company, and it's one of those low float plays. So maybe you wait for this thing to start showing like these unusual breakouts. If you're going to play the day trade game with it, this is like a day trader type of stock. But if you're trying to play the swing trade, that's all you can do. This would be a good one for options, probably, right? You like whether you buy some cheap calls out of the money. I'm not a fan of buying calls, by the way. Every moron on YouTube talks about, oh, you buy this call for 5 cents and look, you make $1,000. Complete nonsense. Okay, you're actually better off selling puts, believe it or not, and taking delivery at a lower price. But again, I'm not going to talk about all that. So that's the idea with that. Thank you for asking. I hope you find that helpful. All right, but there's not much technical analysis can really do when it's one of these because they're highly irrational. Okay. And it's all about sentiment. So thank you for asking. Hey, Daryl from Colorado. All right, cool. Thoughts on Russell, all right, in US 30, okay, versus a weak NASDAQ. Would that suggest NASDAQ would be better short? Very good question, Daryl. All right, so I'm going to answer that question here. Let me put that question in the thing here. I got to answer that question. That's a very good question because it's a question about relative strength. Okay. All right, hold on. Can't see. Oh, okay, it's a coin. Thank you, Armander. It's a coin. All right, so let me get to that. I'll do KNC, but so Daryl asks a question here from Colorado. Thanks for the Russell thoughts on Russell and US 30, right? Dow 30, the short squeeze versus a weak NASDAQ. Would that suggest that the NASDAQ would be a better short? Yes, that's called relative weakness. Okay, and I look for that same relationship in Bitcoin. So let's take a look. What was that? You want the US? So I'll take a look at the Russell. All right, that's a US 2000. Okay, and look at this. So these are the small caps, and these are the small cap stocks that have all the potential. And when the market gets better, as far as rates start going lower, and we start to get into like a bullish environment, these things usually lead the way, right? These are all your high potential cheap stocks come from. So as far as this is an interesting rally, and it's aggressive, all right, but it is in a bear market, as we know. Let's go to the weekly chart. Look at this. Look at the weekly chart. So it's interesting, but has it taken out any significant levels? No. Look where it is. Okay. It's at an old support, and that's a potential resistance area. So nothing more than a bear market rally, just fooling people into getting long. That's really all it's doing. You can argue and say, but that's a higher low relative to this structure back here. It's possibly a higher low, double bottom higher low, possibly, but it hasn't proven itself yet. Like, what do you mean? It's where they're buying it. Yes, but you're at the midpoint of the range. This thing can consolidate here and just go right back to the low. Right? Maybe it breaks higher, but we don't have any evidence of that yet. If you are aggressive and you took the long off that double bottom, okay, great. You have some green, but you take that money because you can't sit there and expect this high to be taken out. Not yet, not in this environment. Okay. So anyway, so now let's compare that to the NASDAQ, right? So the NASDAQ, which has been having some problems, NSX USD, okay, the NASDAQ is nowhere near as dramatic. And usually the NASDAQ is, right? All the tech stocks, that is relative weakness. So if the selling comes back and hammers, this thing is in position to get hammered if the S&P sells off, just like you described there. And look at, this is a weekly, right? We get that inside bar for the week and it takes out the low of that inside bar. We're looking at a possible test of low, possibly. Now, that's not something that I'm saying will happen. I'm saying probability favors that. Of course, we need confirmation. So, the point of these streams that I do here is to give you an idea of what the scenario may look like. But usually when I'm doing the analysis, there's no confirmation. That's what you need to wait for, because the markets change, things change. Chairman Powell may come out Wednesday and give everyone a surprise that no one's expecting, right? And these charts will change. So you can't have any opinions, especially, well, in 3 months, this will be here. In 6 months, this will be here. There's no way to know. Markets are random and efficient, okay? Highly efficient. Keep that in mind. All right, so good question. Let me take that question off there. All right, so one more, and then I'm going to wrap this up. Let me see, whose question can I answer here? What advice would you give on Ethereum, on ETC? Okay, now hold on. I have to do that KNC because that guy asked earlier. All right, KNC. ETC, yeah, these Ethereum people. I don't know, man. I don't know what to tell you about that. Hold on. Let's take a look at this thing. So here's this Kyber. Kyber, I guess that's how you pronounce it. Oh, this thing looks horrible. Let's take a look at the weekly chart. All right, so, oh man, someone got stuck at the top on this one. So you have this support level, okay, which was recently broken. Look at that. You have some price action here that it's trying to find some stability, but this chart is horrendous. There's no trend here. I mean, if anything, the trend is generally bearish. The momentum is generally bearish. Supports are just being compromised. That was a pretty significant support. It's compromised, clearly. Okay, so I would not be enthusiastic about this or optimistic. In fact, if it takes out the previous week's candle low, you're looking at potentially lower prices, right? You're looking at like this level here. That goes all the way back, a couple of years there. You see that? So that's what the structure says. We need the market environment to turn around before we see this stuff change. So if you're thinking long-term with this and you're looking to buy, if you're thinking you like the project, whatever, keep it small. That's all I can tell you. Keep it small. This thing is poised to go lower. Look at the pin bar yesterday. Pin bar, bearish pin bar, sell signal in effect right now. Will that make the lower low? It possibly can. I mean, and look at this recent structure. Nothing but lower highs. Look at this. So forget it, man. No way. I certainly don't like it on the long side. Not yet. Okay. So I hope that helps. Okay. All Romanian newspapers talked about Elon Musk being here in our country, having a party with some billionaires. But so far, no one attacked. Is that what they say in Romania? Hey, he likes the Romanians. All right, cool. Seems everyone is lying about it. That's hilarious. Elon Musk is in Romania. All right. Okay. Well, I'm sure it's a fun place to party. I mean, maybe that's funny. Thanks for sharing that, Alex. All right. So people, I got to wrap this up. Otherwise, I just talk and talk and talk. I stream every day, so you guys know where to find me. What are you looking at when you want to see commodities or okay, Alex, to answer that question, I just basically look at something like gold, right? Because they generally follow each other. Not all of them, but there's like an index you can use, but I just look at it just a couple of whatever, I'll just sample. Oh, take a look at gold, take a look at silver, take a look at maybe like a corn or a wheat, but it's all a function of the dollar. So after I look at the dollar, I can pretty much tell you what's going on with them. They're probably not doing well if the dollar is on its highs, right? But pretty much gold sums that up for me. Is that the best way to do it? No, you're better off looking at an index like you pointed out there, but I don't look at that index particularly. Okay. Chris from Milan. Buonasera. What is it, like 10 o'clock over there? All right, from Milan. Okay, you guys. Mohammed, I went over Bitcoin first, so you can go back once I conclude the stream. You can go back and watch the beginning. I spent like 20 minutes talking about Bitcoin. Okay. All right, you guys. So yeah, I got to wrap this up. I'm sorry if I missed it. I see some questions here I'd like to answer, but I got to wrap it up. So listen, you know where to find me. Ask me the question again in one of my other streams, and I'll be happy to answer. Okay. So enjoy the rest of your day, or the rest of your evening, wherever you are in the world. Thank you very much for watching.